Jim, given what's going on in the global economy, including the Iran conflict, how are emerging market economies holding up?
Surprisingly well. In fact, spreads have tightened this year. So what we've seen, and in any crisis, you see the same thing, there are winners and losers. So we have a lot of oil exporters in our market, and they're not just in the Gulf. So we've got a lot of oil exporters in Africa, think Angola and Nigeria. We've got a bunch in Latin America as well, think Ecuador, then Colombia, Argentina, Vaca Muerta, Brazil, Mexico. So that's all been very positive for them. We've got some losers too. We've got some oil exporters who can't get their oil out of the Gulf. And then we've also got some importers such as Egypt and in India. But on average, we're doing quite well because we have more oil exporters and importers.
Can you take it a little bit further with regard to the Iran conflict and how you see this playing out over the long term for the emerging markets? Of course, they're doing well because commodity prices are going up in some cases. But on the other hand, we hear of actual lines at the gas station in places like the Philippines.
Right, and that's pretty normal when you go through an energy shock like we've been through. But again, you go back to what's the long-term implications, and we've got the majority, once this resolution takes place, and I don't know when that's going to be, but you're going to have an abundant supply of oil coming online. Oil prices will be higher for a while, but on average, they'll see them trend down, and that'll be hugely positive for importers. At the same time, our emerging market countries that export oil are making money hand over fist, so their terms of trade are significantly improved.
Are you seeing a lot of issuance, fixed income debt issuance from the emerging markets, and how's it doing?
We have. So we've seen a lot of issuance this year, and this is another great year where we'll have the net issuance will be very small. It'll be $50 billion in total, and yet we've seen over $250 billion in issuance from sovereigns and corporates, and that takes us to over half the issuance expected for the year, and we're only 4 months in. So all of this issuance that's come online, there's been huge demand for it because you've got good growth, low inflation, and that's led to spreads tightening.
Can you talk about geopolitics and emerging markets vis-a-vis the United States in the time of Trump? Because it seems like some of these relationships can be fairly mercurial. So you don't know if, for example, a Latin American leader is in good stead with Trump or bad stead, and it can change. So what does that mean in terms of investing?
So we've seen a shift more to the right. And it's interesting because think about Latin America for a second. You've seen a fairly significant shift more towards the right, center right, but still right. And it goes from the tip of South America, Argentina, all the way up through Panama. And I'll even say Mexico is much more pragmatic than it used to be. You've still got some left-leaning countries. So, we've got an election coming up in Colombia. We've got one coming in Brazil, but I think that's a bit of a non-event. I think they're much more centrist. But the shift to the right has been important. I think what's helped it is the Latin America focus from this administration. Venezuela front and center is a big part of that, and that does shift the sentiment more towards the U.S.
We did have an election in Hungary, and that was a shift to the left, away from someone that used to work very well with President Trump. So can you talk about what's going on in Europe? You still have the Ukraine war, which is raging. What does that mean for emerging markets? I guess you can still call them emerging markets in Europe.
You can. And we've seen a lot of investment coming into Europe, and that is a lot of it is defense spending, as you can imagine. So there's been an offset somewhat from the rise in oil prices that's led to a lot of investment coming into Europe, again, on the defense front, and that's trickled into places like Poland and Hungary, Czech, et cetera. So we're more positive longer term there because of that.
And then what are your thoughts on the current state of the dollar? Because this also ties very much into emerging market economies. It seems as though you keep seeing China wanting to replace the dollar with whatever they have. You see what's happening in gold. It's now kind of leveled off around 4,700. So what's the state of the dollar right now, and how does this affect what you do when it comes to emerging markets?
So the dollar is still the strongest currency in the world, and it is the reserve currency of the world, and that is not going to change no matter what China does. It's not a freely floating currency. That's not one you can transact in easily. So we do not think that that's likely. We do think the dollar will go through periods of strength and weakness. We think we're undertaking a global rebalancing right now, and we're seeing this across the world. So we're seeing people sell dollars because they're overweight dollars. Think stocks and bonds have all risen relative to what they own or what their home currency is. They need to rebalance. We're definitely seeing that. And that's flowing into emerging markets. It's flowing into non-dollar investments more broadly, but emerging markets are the direct beneficiary because we have higher yield and better growth.
So finally, if you were to rank your top emerging market debt regions right now, win, place, show, I don't know how you want to do it. So what do you like in terms of emerging market debt? Where in the world do you like it?
We like Latin America and we like Africa. They export commodities, they export oil. We're seeing better growth. We're seeing inflation come down. These are the two big areas for us that we want to be overweight. On the flip side, we're seeing not as much value in Asia. And that's because spreads have been tight. They're oil importers. There's always winners and losers, and our job is to pick the winners and losers. I'd much rather take the high yielding credits in Latin America, which are growing, which we've seen many more upgrades than downgrades, and that's likely to continue, as opposed to Asia, where spreads are very low. They're going to go through a transition of oil. I'd rather be underweight that and be overweight the high growth stories.
All right, well, thanks for coming on and talking about it.
Thank you.